they're allowing, obviously, Nvidia chips to be sold into that market again. That was a big move. Moving the stock.
But we didn't even talk about what Tesla has to do in order to get chips by going to Samsung.
Samsung, they're going to, yeah. That said, I don't, listen, it's always hard to judge what's happening in China with clarity.
Right.
But they do seem to be moving very quickly in terms of their ability to. They're not going to match Nvidia. No way. They're not going to match Nvidia.
Did you see she said
robots, cars, and AI, Jim? They are. And obviously, in certain areas, they far surpass us. Solar, batteries, things of that nature. So you can't dismiss them in any way. But to your point, and the point that I think Jensen made is, wouldn't it be better if we were in the market rather than out of it and allow them to continue to innovate so they equal, if not exceed us at some point?
Right, and people feel that, Jensen said, why would they use us for the military? I mean, we know what they're going to be doing with the chips.
Right.
Look, I know there are people hardcore fight this decision, Carl. They fight. But in the end, I agree with Jensen. Not that it's hard to do since he's so brilliant. But, yeah, you want everything written on us. You want us to be the only guys in town, because that would be great.
Back to the larger issue of capex. So Alphabet increased its capex by $10 billion.
And gleefully.
75 to 85. And obviously some of that is going to pay for those chips that you're discussing.
But Gemini's working.
What are we going to see from Meta? What are we going to see from Amazon? Do you expect similar increases or maintain?
They have to, because it turns out that what is needed is speed. That's why, by the way, Jensen likes quantum. What's needed is speed. I mean, Carl, I go on all these all the time, and some of them are just so eager to please. They'll say, hey, I'll say, tell me how bad this quarter was, and they'll find how bad it is. I think a lot of this is they don't have the ability to be able to scrub as much as they like, and that's the weakness with the systems. You need to go faster. If they go faster, they can include more. They need to make more deals. They scrape the wrong stuff. Scrape the journal. Jesus, scrape the Times.
Well, there are three Mag 7 names that are up 20 for the year: Nvidia, Microsoft, and Meta.
It's amazing.
Nvidia, new high, I think.
Yeah, Jeffrey says this is a nice problem to have. Their H20 AI chip for China cannot satisfy the demand for it. They believe Nvidia has up to 900,000 H20s, but China wants 1.8 million of them at 175. Nvidia was at a new high today.
A nice position to be in, I'd say. New high. Thanks, Lauren.
Charles, this is one of yours that you're watching.
Yeah, you know what? One thing we talk about a lot in investing is pricing power, right? So one of the headlines this morning is AMD increases the prices of its M350X chip by 40%. Think about that, right? I mean, that's what moves your stock the way AMD is moving. And AMD, I remember years ago when AMD was going against Intel, Intel used to crush them like a bug over and over and over again. And now AMD might be the only real legitimate rival to Nvidia. I mean, they're in their shadows, but they are gaining big time. And you can see the stock. Again, you can increase your prices to this degree. This is organic demand. This is not tariff-related demand. This is like the world is in a race, and they consider this chip to be so good that they're willing to pay 40% more.
That's amazing. 43%. You'd be richer if you had bought AMD at the beginning of the year.
Yeah.
So that's remarkable.
Following the company's announcement of a new collaboration with Nvidia to advance 800-volt direct current, VDC power solutions for future AI data centers, Onsemi shares surged more than 4% in pre-market trade on Tuesday. The goal of the partnership is to develop a next-generation power distribution system that can efficiently transport vast amounts of energy while minimizing losses during voltage conversion. By providing high-efficiency, high-density power conversion at every point of the power journey, Onsemi's intelligent power portfolio is essential to enabling the next generation of AI data centers, the firm stated in the announcement. With the help of intelligent monitoring and management, the chipmaker provides cutting-edge power solutions for solid-state transformers, power supply units, 800 VDC distribution, and core power delivery. Most notably, Onsemi is one of the few vendors offering silicon carbide chips that contribute to extending the driving range of electric cars. Despite worries about a possible 25% U.S. tax on vehicle imports that may drive up prices, growing EV sales in China and Europe in the first quarter helped to boost demand for these chips. The business reported second quarter revenue in May that exceeded analyst projections, pointing to sustained high demand for its EV-related semiconductors. With the help of its most recent Blackwell graphics processing unit, GPU architecture, Nvidia is still the industry leader in data centers. The corporation made $39.1 billion from the data center industry in the first quarter of fiscal 2026, a a 73% increase from the previous year. Nvidia said during the most recent quarter's earnings call that Blackwell currently accounts for almost 70% of the data center segment's compute revenues, driven by the growth of sophisticated reasoning models and artificial intelligence (AI) factories. The Blackwell platform from Nvidia, especially the GB200, is designed for extensive AI inference. Major cloud companies are quickly installing Blackwell GPUs, with each hyperscaler delivering up to 72,000 GPUs each week, according to management's statement on the most recent earnings call. Blackwell has become the quickest product ramp in Nvidia's history, thanks to increased availability and improved manufacturing yields. Additionally, Nvidia is getting ready to release its next-generation GB300 in the third quarter of 2025. The GB300 chip claims a 50% performance jump over the GB200 thanks to its efficient drop-in design and additional high-bandwidth memory. The biggest cloud service providers have already started the early sampling process. Hardware hasn't been the only factor in Blackwell's success. Blackwell's potential can be fully utilized by developers because to Nvidia's software ecosystem, which includes CUDA, NeMo, and its inference microservices. Customers find it more difficult to go away from Nvidia because of this strong integration. Nvidia's dominance may get stronger as the AI trend continues to rise and more businesses construct AI factories throughout the world. The company's dominance in data centers is probably going to last as long as Blackwell keeps up its present rate and Nvidia keeps providing it with a robust ecosystem. According to our model predictions, the company's data center end market sales will grow at a compound annual growth rate, CAGR, of 30.3% from fiscal 2025 to fiscal 2028. So, what implications does this have for Nvidia's stock? Let's explore that. But first, a big thank you to those of you who've stuck with us this far. Creating these videos takes significant effort and dedication, so if you're enjoying the content, please hit the like button, subscribe to our channel, and share your thoughts on Nvidia stock in the comments. Your support truly helps us grow. Now let's get back to the video. The two main rivals of Nvidia, AMD and Intel, are also improving their skills in the market for data center AI chips. The MI300X GPUs from Advanced Micro Devices are becoming more well-known because to their excellent memory and power efficiency. Many hyperscalers are evaluating AMD's products as potential substitutes for Nvidia's Blackwell, particularly for workloads that are specialized or cost-sensitive. In an effort to attract more clients, Advanced Micro Devices is also developing a robust software stack. To gain market dominance in the data center industry, Intel is concentrating on both CPUs and AI accelerators. The business is marketing its Gaudi 3 AI chips as an affordable choice for inference and training. To increase the uptake of its AI hardware, Intel is also collaborating with significant cloud providers. Insider selling is frequently interpreted by investors as an indication that a stock may be in difficulty, or possibly as a warning that insiders don't think there is still opportunity for it to rise. Particularly when a CEO is engaged, that may cause concerns for a stock. Now the most valuable corporation in the world, Nvidia has been a top-performing stock for years. However, Jensen Huang, the company's CEO, has recently started selling off company stock. He has already sold hundreds of thousands of shares this month, and he plans to sell many more. What motivates his actions, and should ordinary investors think about cashing out as well? Despite the fact that Nvidia's CEO has been selling shares this year, investors shouldn't be alarmed for a few reasons. The first is that he informed the public of a pre-published plan that included his stock transactions. Huang filed a Rule 10b5-1 proposal to sell up to 6 million shares in March. Following the implementation of such strategies, a selected broker executes them by making the trades at certain intervals. This guarantees that the executive's fresh insider knowledge won't affect the sales. Over time, CEOs frequently sell off some of their shares, particularly if they own a large amount of the company's stock. Furthermore, it doesn't imply that they anticipate difficulties with their stock. Second, Huang will continue to hold a significant stake in the business even if all 6 million of those shares are sold. He currently has over 858 million shares, or about 3.5% of all of Nvidia's shares. Few institutions own more of its shares than he does, and he continues to be by far its largest individual shareholder. Therefore, even while these stock transactions could appear noteworthy, they are by no means extreme given his overall position. The company shouldn't be worried about Huang's stock sale. Nvidia's artificial intelligence, AI chips, are still in high demand, and there isn't much cause for concern that this growth will slow down anytime soon. According to Grandview research analysts, Nvidia should greatly benefit from the AI chipset market's projected compound annual growth rate of 28.9% through the end of the decade. Investors should still think about valuation, though. Nvidia is currently selling at 55 times its trailing profits, which is a somewhat high multiple considering that the S&P 500 average ratio is less than 25. As several tech firms are creating their own unique AI chips, investors should not expect that Nvidia's supremacy in the AI chip market will stay unchallenged, despite its promising growth prospects. Additionally, there will be high expectations for the company because it trades at such a premium. In effect, Nvidia's stock already has a lot of anticipated future growth priced in, which might reduce the profits for investors who purchase the stock today. With a market valuation of $4.2 trillion, Nvidia is the most valuable corporation in the world and is now trading at all-time highs. Although the tech company's stock has a lot of potential to rise as it benefits from its dominance of the AI chip market, investors have no margin of safety in the event that, for instance, the economy slows down and businesses reduce their expenditure on AI. Investors may want to think about cashing out some shares now while still holding ownership in the company, similar to Huang's last stock sale. As the market leader, Nvidia has the ability to generate market-beating returns even if you don't anticipate it to double or triple in value in the near future. For growth investors, a buy-and-hold strategy might still be quite wise, but if you're still hanging on to Nvidia stock, you might also want to think about selling a portion of your holdings and booking some profits. Don't forget to share your thoughts and experiences in the comments below. Your input helps create a more knowledgeable community where we can all learn and grow together in the world of investing. Stay up to date with the latest market trends, insights, and key updates by subscribing to Investing Tutorial. We're here to help you make smarter investment decisions and stay ahead of the curve.